So, I think that, what we have here right now, though, is we're in a tough situation. The economy is actually a little bit softer than a lot of people were expecting. I don't expect that we'll see anything approaching recovery short of the end of the third quarter, maybe the end of the fourth quarter. But I think the potential for recovery is there. And the critical thing to watch in that is overseas, particularly in China. One of the problems that we have is an accelerated cost of energy, and a lot of that is affected by worldwide demand. We've already seen demand drop in some areas. U.S. driving's down over 1%, first time in history, I believe. In Great Britain, it's down 8%. Of course, they're dealing with $10 a gallon gas, not $4.50 a gallon gas. So they're in a much rougher shape proportionally to us. But the real kicker is China. China has been an enormous consumer of commodity products, and not just energy, steel, building products, manufacturing inputs, things like nickel, copper. These things are really off the charts. So it's not just energy that is a problem, also food. And the real issue with China is they've got a conundrum. They need to slow their economy, yet they're also dealing with the Olympics, which are starting now. So politically, they have a tough situation, but they even have a tougher situation politically in that if they don't get their inflation under control, which is much worse than what we're seeing here in the U.S., they are in real trouble. I mean, when food prices go up 50% for a lot of the basic goods that still largely a peasant agrarian economy uses, they have a political situation that they have to address. They know that. They've announced publicly that they're going to slow. They've eliminated subsidies on diesel and gasoline recently. They've changed some of their lending standards to their industry. And their government has a lot more tools than the Federal Reserve does in terms of being able to slow an economy. I think that they will. The question is when and how much of an effect that has. I think when that does slow, and it could be as early as the fall, though it may well be later than that, you're going to see a tipping point in the energy, and you're not going to see modest corrections as we've seen recently. You're going to see major corrections. So the potential for energy to get below $100 a barrel for oil, and maybe even as low as 75, is real, and it's there. When that happens, you'll see a resurgence, because right now we've already seen the Fed cut rates consistently. The cost of credit is cheap. The availability is still an issue, particularly Wall Street versus Main Street.